Welcome back, investors, to Ticker Time News. I'm Adam, and today we're going to talk about three important things. Number one being Netflix. Netflix had earnings out, and they were pretty decent. And number two, we're going to talk about the earnings cycle so far. How have Q4 earnings actually been? And then number three, we're going to get into the charts and talk about the market today. So first up is Netflix. Wait. I do need to slow down for just a second, and I need to just say this. My apologies for last live stream. The audio cut out. I don't know what happened. Hopefully it's fixed. So if you could, in the comments, if you hear me go out, just say it and I'll know, and I will I'll do something about it. Also, in the live chat, there is a link. Awesome. What was that? What was that? A J went out. Okay, there we go. There's the proper message. In the live chat, there is a link to join our private investor community. So hopefully you find this information useful and you click the link and you join us for this ride. Okay, now, along this live stream, the most important thing, absolutely hands down, is your questions. So if you do have a question, leave it in the live chat. We'll talk about it and we'll go over it. Okay. All right. So first up is Netflix. Now, Netflix is on a winning streak. Look at the chart going all the way back here to this would be December the 28th. Netflix has been winning. A slight pullback. Investors were concerned about earnings being negative, but no, it sent Netflix up over or 8.5% today. Okay. Pretty big move here for Netflix. If we look here at the 5-day EMA, it just completely blasted off. I mean, it's been connected for several sessions in a row, but today it just completely skipped town on that. So don't expect this big move to really continuing to be a big move. Today was, I think, a one-off for Netflix in doing that. So just be careful with continuing this. Don't chase. Don't FOMO into it. It's up. It'll pull back. I'm sure it will. Okay, now about Netflix earnings specifically. The streaming giant's Q4 earnings report did exceed high expectations. The company not only crushed its paid net ads forecast, but also announced a new leadership structure with COO Greg Peters taking on the role of co-CEO. Now, the Q4 report was full of positive standouts, including a projected return to positive net ads growth, a ad-supported plan, paid sharing, which was interesting, and video game offerings. Those were all positives for the future. Netflix is thinking long-term here. They're not thinking, oh, what can we do this quarter or next quarter? They're looking at 5 years down the road or so. Now, with that said, there were a few minor setbacks, such as an earnings miss and muted sales growth. These were overshadowed by the company's numerous bright spots, though. Overall, Netflix continues to set its sights on that longer-term goal of double-digit revenue growth, expanding margins, and positive cash flow, keeping investors excited about the company's future. Okay, that's Netflix and just a real back of the napkin what I thought about their earnings. Okay, what's the future of Netflix? Streaming only? Yeah, streaming only and gaming. Now, Alphabet had Stadia, right? And Stadia was online only streaming. Okay? Online only video game streaming. It was neat. It was cool. I think that's the future of video games. I don't think, Nintendo and Sony selling Xbox and having the hardware in your living room connected to your TV, I don't think that's the future of gaming. I really think the future of gaming is streaming. I mean, look at how successful games can be just being on a smartphone or a tablet. They can be hugely successful. Now, they do, in Apple's case, have to get around that paywall to really make things work, but just look at those two components. I guess you could say, yeah, the hardware is still in our hand with the smartphone or tablet, but the game is not. We are streaming that game. So maybe over the next couple years, we get some sort of a hybrid, like, Alphabet's Stadia and Xbox, combining together. And I know Xbox, Sony, they're working on their own streaming for gaming. And I know it's out there. Netflix offering games and gaming as well. I think it's interesting. And I think that would definitely open up a new revenue stream. And of course, with the paid tier, the question is, will anybody on a paid tier, right, go down to the ad-supported tier? So they stop paying. In a recessionary time, most likely, right? You want the cheapest version. It happens. But then as we move out of that and people don't want to sit around and wait and watch for the ads, I mean, we have become addicted to being able to fast forward those ads. It may not be in Netflix long-term plan as a big slice of Netflix. It may be a smaller slice where that's where your young adults fit in. Maybe they are okay with, paying a cheaper version of paying for a cheaper version of Netflix and having ads interrupt the show or movie or what have you, ads at the beginning or the end. We'll see how it works out, right? Even though streaming has been around for a while now, it's still relatively new, and not everything has been figured out yet. At least that's my thoughts. Everything that we watch here at the house is done through streaming, right? Roku TV, and stream what we want to watch. Gaming should be that way too. But where's the hardware going to be? I think that's what Stadia from Alphabet was trying to figure out. Can the hardware be in the cloud and run the game? Netflix might think so. Stadia was obviously a losing bet for Alphabet for now because they're closing it down, but Stadia was pretty interesting. I enjoyed it. I thought it was really, really neat. I wonder if $340 for a streaming company, we have to ask ourselves, is that right? If we, just go back here a little bit for Netflix and look at where it was during the pandemic, yeah, $340 for Netflix is possible when everybody's locked down at home. I mean, look at that. Of course, once subscriptions started falling off because people started to go back out into the world again, yeah, Netflix valuation cratered. But it has been on a strong comeback, right? It's not quite back to, a 50% retracement of that all-time high, back to the lows set in May of last year and July of last year. Maybe it can get to that point. I think maybe Netflix is going to have some real resistance problems when it gets to the 390s again, if it gets there. And again, we have to always have our minds geared towards this potential recession that's coming up. Anything that is discretionary is going to struggle through the recession. Anything that's not making a profit is going to struggle through a recession. Anything that is not cash flow positive will struggle through the recession. This is where the larger companies who have healthy balance sheets will prevail. And a bunch of startups will come and take out some that didn't have those healthy balance sheets and take their place. That's what happens during a recession. Companies get flushed out, zombie companies go down, but startups pop up, take over, and become better. Can Netflix hold on to what it has through that potential recession? With the ad-supported tier coming, I think that would be very helpful to Netflix. As far as, $340, $350, $360 a share for Netflix right now, no. I'm not seeing a valuation for Netflix. That's why the 8.5% move that Netflix made today, I don't think that it can sustain that. Netflix going back down to the 290s, 300 a share, I think that would be a fair place for Netflix to be during this recession or potential recession, depending on how you're looking at the economy, right? But Netflix going, to that 350, 360, I'm not seeing it. I'm not seeing that at all in Netflix. It's just they're spending a lot of money right now for the future. Okay, so we all have to get on board and make sure our mindset is towards the future right now when we're looking at our shopping list. I mention it often. Make sure that you have a shopping list. The companies that you like, write them down. When we get to the bottom, wherever that may be, that's when you set forth and buy up the companies on your shopping list. So I think Netflix right now is putting their head down. They're doing the long-term work. They're doing the work that can help propel Netflix into this next stage of streaming, whatever it may be. But I don't think $350 a share is the right price for holding Netflix through potential volatility, even though it's been on a win streak. I mean, it has been. It's been on our momentum list now every week in 2023 so far, and I believe most of December. It was in our number 2 spot for this week, Netflix was. So, again, its momentum is starting to wane, I think, now that earnings have come out. We'll see how well investors, take Netflix's earnings. And if they can carry this on, I don't think they will. I think Netflix is going to pull back and retrace. It was already right before earnings going through a phase here where, it was curling over. It was topping, if you will, kind of forming a double top. So this little burst from earnings right here, I think will cool off going into next week. Because if you look at how earnings are right now, they're not great. They're a bit lackluster, in my opinion. And that's the next topic that I want to get on. But I also want to get to your questions here as well. Let's see here. Just got here. Awesome. Sorry I missed you guys yesterday. I just had one of those days where I just couldn't think straight. Yeah, I don't like Netflix. More of a COVID darling. Definitely was. Its highs that it saw during COVID, that was like a one-time thing. Maybe in a decade, maybe at that point, or maybe 5 years, somewhere in between 5 to 10 years, maybe Netflix can get back to the way it was during COVID. But oh man, the younger generations are coming up, all they know is streaming, right? And you got the baby boomers out there who, their kids are trying to get them to stream, but no, they are fine with their cable subscriptions. So there's going to be a waiting game for Netflix to even get close, I think, to uh, the highs of COVID, the COVID highs for Netflix. Just gaining 50% of that back would put Netflix at $430 a share. It's I don't see it going over $400 a share in the next 5 years. I think Netflix is really a long-term plan right now, and it's got to hold on to that. I don't know if it can. What's up, family? How are you doing? Hope you're doing well. SPY has fun for day trading lately, hasn't it? It's been pretty neat. I'm going to talk about the SPY here shortly. Netflix spent about $300 a subscriber in the last quarter, over $1 billion in ads. I mean, yeah, and just wait till they launch the ad-supported model. I just can't imagine that price is going to go up even higher. They should just pay me that. Yeah, that'd be good, huh? $294 to be specific. Wow, you're right on. Take the premium and run. Yep, there's a lot of good series at the moment. There is, I'm finding some new things weekly on Netflix that are rather interesting. I just don't like, and you got some good examples here. Wednesday was a huge hit for Netflix. That 90s show, yeah, just that Wednesday show was incredible for Netflix. The thing is, though, there's a lot of series that Netflix puts out, and it's a one and done thing. And I don't know. I don't mind a one and done season for a show as long as the story has a fulfilling ending. But if it does not, you can't go one and done. My wife doesn't like those types of series anyways. So, all right. Check Tesla. Yes, Tesla is definitely one to be there. And feel you back. Absolutely. The love is in the air, isn't it? TSLA, and then I want to talk about. I do want to mention how Q4 earnings are going so far, because they're not going good. Okay. In the stock market, I think it jumped right today pretty handedly, but I'll show you when I get to the SPY what I think the market's where it's going, what it's doing. Okay, so this remember this yellow box here for Tesla. It goes up to 140 a share. It dropped down to 130 a share. That's a spot that I think Tesla could be trading in, but it's going to be volatile. Now, on a chart pattern for Tesla, we've got that ascending triangle, right? And if you remember back here on chart patterns, the ascending triangle, okay, here we go. It's on the bottom left corner, ascending triangle down here. It's actually a neutral chart pattern, right? Price comes up, you have a flat top resistance, and price is ascending on the support level, and it can literally break either way, up, or it can break down. So this is a neutral chart pattern that Tesla is displaying right here, right? Price can even come down into it. You could potentially swing this trend line, somewhere down here, right? And then move it back up. And what do we have now? Well, let me show you. Now we've got this, like flagging pattern where price came down and now it's consolidating up. This is actually a bearish pattern where price typically breaks back down. So be careful here, because there are two different patterns that I can spot on Tesla's chart, right? One is neutral, one is bearish. And I wanted to point that out to everyone. If you look at Tesla on the RSI, it's only around a 53. So it's right there, middle of the road. It is at a local high. If we look at the RSI indicator down here, underneath the volume candles, you can see that local high has been running right around 50.47 for a while now. Okay, so this could be like the top here as far as RSI goes before it starts slanting back down again. Also, look at this right here, volume for today. I know it's just a line, not an arrow. Look at that. Volume was very low for Tesla today. That's interesting. Like, that's the lowest Tesla has been since December the 15th. Okay? That's the lowest Tesla has been on volume since December the 15th. So nearly 3 weeks here. Yeah, just over 3 weeks. Low volume for Tesla. It had, to be specific on volume here, 138.8 million trades versus 185.2 being the average. So volume stepped off yesterday and then really stepped off today. Light volume for Tesla, and it pushed it up 5%. But if it is in this flagging pattern, then this is bearish, okay? If it is in the ascending triangle, which if I adjust this one more time just to show you that this particular pattern here, the flat top, the ascending support, this is a neutral chart pattern. So neutral to potentially bearish. Two chart patterns for Tesla right now. Adam, I don't get why people are fighting the Fed. The Fed keeps saying what they're going to do. Good news is great news, and bad news is not so bad news. It's confusing at times. It is confusing at times. Market participants, for the most part, are trading with, I'll put them in one of two groups. They're either trading with emotion, which will wreck anybody, or it's being manipulated, right? You've got the big hedge funds that can place big orders. And that's one reason why I like Bookmap so much with its trading capability. Well, I shouldn't say trading capability, because you can't trade on Bookmap unless you attach like TradeStation, for example, to Bookmap. But Bookmap is a software that you download on your computer, and it allows you, like in The Wizard of Oz, when Dorothy sees behind the curtain, right? Bookmap allows you to see behind the curtain of where orders are hiding out. And it's really fascinating software. I can put the website up here right quick so you can see it. It's bookmap.com. But it really does. It really, really does. Where's a picture? That's part of the video. Where's an image? It shows you level 2 data and where it's hanging out, okay? It's incredibly useful. Now, I'm going to start sharing this with you guys. I just need permission first because obviously it's a software you have to pay for. And I learned a few years ago on YouTube, don't share stuff that's behind a paywall during a live stream or even in a video without permission to do so. I learned that lesson. I didn't know it when I first started out. I mean, I guess it was kind of common sense when I think back on it. So as soon as I get permission, it'll be featured daily because it is so valuable. I mean, it is, I can't say how valuable it is. Knowing, I mean, when you're just using candlesticks and, trend lines and so forth and trying to trade, knowing where the actual orders are with the candles, it's just incredible. You know that at 3,900 on ticker SPX, that there's a whole bunch of orders waiting to just bounce at that price. Then you know that's a great place to enter, to go long. You know when it gets to 4,000 and there's a whole bunch of orders there, you know it's time to get out. And it works for equities, it works for ETFs, the indices. It is so incredible. I should get a sponsor ship from them because I love them that much. Specifically, this risk on rally. Yeah, this rally, and I do want to talk about today, but I also want to talk about just real quick, just a couple thoughts on the earnings season, because the earnings season is driving a bit of the main indices. Now, we didn't get to do a live stream yesterday, but before then, we were talking about the 3-candle chart pattern here, right? And how this was a very bearish setup. We got the bearish pull down. Now, if you notice here on the chart, when it pulled down today, it pulled right into this blue line right here that I'm highlighting, which is 3,900. It pulled down to that level yesterday, is what I'm talking about, and closed right on it. Today opens up and then runs. Those orders in Bookmap were sitting there. They were sitting there. And knowing that, you would have known where the market was going. So very interesting indeed. But back to your point about risk on. Right now, the market is so focused on outsmarting the Fed or front running a Fed, let's call it pivot. I don't like to use it because there's no Fed pivot in sight. There's a Fed pause. We're going to get 1 or 2 more rate hikes, February and March, and then the Fed will pause, holding rates at 5% for months and months to come. Maybe by December, they pivot at that point. Maybe not until 2024. Every Fed speaker that has come out, except for Jerome Powell, over the past 2 weeks, has been hawkish. Hawkish. I was thinking dovish. I almost said dovish. No, dovish is when they're lowering rates. Hawkish is when they're taking rates higher. And they're going to take rates higher than where they are right now, February and March. One of those 2 meetings, we'll find out whether it's the last one. And then the Fed will hold at that point. And the market wants to front run that hold as a potential pivot. There's no pivot. No pivot. Now, what I see here on the S&P 500 is this. We've got the downsloping trend line, okay? It's stopped every major rally for over a year now. Every major rally in 2022 and the first big rally of 23, it stopped. No surprise. No surprise there because it's been that way for over a year now. So nobody should have been surprised. Now, the 3,900 area is a sticky point. It is a place where there's been lots of chop. There's been lots of support. There's even been a lot of resistance in this sector going back months. Okay? 3,900 has always been a very important level. I mean, just going back and looking at all of this, looking at all the chop, all the support, all the resistance at 3,900. It is very likely that the market, because we went through this big expansion move, right? We were chopping around right here in the ascending triangle, and then expansion hit. And now we got like this double whammy of expansion moves. I'm thinking the market, you see the triangle that I just formed there, I'm thinking the market is going to bounce around and move sideways in this channel before breaking down. Because I don't think that we've seen the low of 2023 yet. I don't think we're close. Because for the Fed to pause, that means it wants to see what damage it has been able to do to inflation. And if inflation becomes sticky and it is hard to bring down past 4 or 3%, that's not going to be good. The market's not going to like that. That's going to be very negative for the market because that means the Fed may have to go from pause to taking rates a little higher. Now, if everything worked out perfectly, right, and we got a soft landing, then that means inflation will continue to come down all the way down to the 2%, 2.5% target towards the end of maybe Q3 of this year, sometime in Q4 of this year, maybe. If all things were good. I don't think all things are going to be good. And then, as the Fed is holding, we go into the spring, into the summer. What's the economy going to look like? If the economy doesn't hold up and we continue to see bad economic data, the market's just going to go down. And since I am here at this point, I do see your comments there. I do want to go over them. And the tickers you have, I want to tell you this first. For the S&P 500, Q4 earnings season is off to a negative start, with the numbers and magnitude of positive earnings surprises below average. Right now, the earnings that have come out thus far, and we have a long ways to go, are below the 5-year and 10-year average for earnings. The index is also reporting a year-over-year decline in earnings for the first time since Q3 of 2020, with a 4.6% decline as of today. A 4.6% decline as of today. This is due to a combination of negative earnings surprises and downward revisions to estimates by analysts in the past few weeks. The financial sector has been a large contributor to this decline. In terms of revenue, companies are reporting a growth rate of about 3.7%, which is below the end of Q4. and the lowest growth rate since Q4 of 2020. The energy and utility sectors, they have been the largest contributors to this decrease, which is kind of surprising. You think energy prices are up in energy. How can they be contributing to this decline? Looking forward, analysts expect earnings to decline in the first half of 23. However, they do expect earnings to recover in the second half of 2023, with an overall growth of 4.2% for calendar year 23. The forward PE ratio is 17 right now, which below the 5-year and 10-year average. But it is above the ratio at the end of Q4. We've got nearly 100 companies reporting earnings in the coming week. So we'll see if any of this improvement can happen. Otherwise, earnings are going to continue to unimpress. Of course, you'll have your one or two here or there, like what Netflix was able to do, even though their earnings were down. It was all about the future for Netflix. Okay, let's get over here to a couple of these. I just wanted to mention that about earnings right quick. Uber, Amazon, CrowdStrike, and Target. All right, we got a list to go through. Now, just remember, the market is fluid, okay? It's not static. So if I say, for example, wow, this one's been on a run, and it's been, look at these gaps that it's been creating. That doesn't mean it'll continue. If I say, oh, you know what, this thing's been running so heavily, maybe this is a short idea, that doesn't mean it'll stay a short idea. The market is fluid. It's constantly changing. So keep that in mind as we look at these stock charts, okay? Now, it is very fair to say that Uber has been on a run, a massive run. Look at this. December the 28th, it's got this bottom down here, and it's been running. However, it's getting a bit up there, right? All right, let's put this trend line on. We can go from here to here to here quite easily, okay? If I run it back forward, we're actually going a little bit higher than back here. So it doesn't quite line up yet. Now, if we look at this, you're going to say, well, what are we doing here? We're making lower highs, okay? So in the short term, that's not good. Now, if we also, let's go to the bottom here, and unfortunately, I mean, maybe not unfortunately, but we can, to tag before the gap up occurred right there, look at this. Now we're making lower lows. So what you have here, even though it's pretty broad, price action is off, but we're making lower highs and obviously skip the huge gap up back here above my head, this huge gap right here. We're making lower lows. Now, that's not what you want to see. This is weakness, okay? Even though these rallies, its most recent one has been really good. It was a nice rally. But a lot of small cap companies have gone through a short squeeze. That's why the IWM, which is like It tracks the Russell 2000. Those are your small cap names. That's why it's been outperforming the broader market. It's been outperforming the SPY because a lot of small caps have been going through the cycle of a short squeeze. Short squeezes don't last forever. These smaller companies that either are profitless, don't have good cash flow, they're not going to hold up. So I'm looking at Uber here, and I'm thinking, looking at the chart, it's getting a bit hot, okay? If you look at the RSI, it's at a 74. 70 and above is overbought. So the overall trend here isn't looking good for Uber. I mean, it's come from sky-high prices, but this setup right here is not looking good. This, to me, is looking like a potential opportunity to short while it's getting a bit hot, okay? Now, that doesn't mean that it's going to be a potential shorting opportunity forever or even for the next week. It could change, it could update. But right now, this to me is getting a bit too stretched, right? If we go over here, bottom right side of the chart, over all the way to the right, if we look at their earnings right here, all right, they've been, the past three have been misses. Going back, 1, 2, 3 earnings ago, I mean, that was a pretty substantial miss. Drop down a little bit further. This is these candles right here with the yellow, the blue and green and the yellow. This is quarterly earnings for Uber, right? And right off the bat, 4 quarters ago, profit margin was negative 50%. Then it went to, profit margin went to a 15.4. Then it went to negative 86.5, negative 32, negative 14. So you got to be careful with these negative profit margins. It's good to see it rising. That is good. But again, you have to be careful with that. Over the past year, it's down 20%. Year to date, it's up 20%. Like I said, it's been on a good run here recently, but I think that run is getting a bit long. All right. So I wouldn't be chasing Uber much higher. I mean, just looking at this, it's running into some resistance up here. And even if we were to try to find, look at this. Let me put this on here, right? This would probably be it for Uber. So if it could break this downsloping trend line here, and what do you need for a trend line? You need at least 3 touch points or more, and we have that. 1, 2, and today makes 3. If it could break that, then getting up here to the mid 30s a share could be possible, but then really it's running into some heavy resistance at that point. Okay, so just be careful with this one. Let's go to Amazon, AMZN. AMZN for Amazon. Tesla is soaring, yeah, but what the chart pattern I just showed for Tesla is it's either a neutral chart pattern or it's a bearish chart pattern. There's 2 that you can look at right now through that lens. All right, opening up Amazon. Like the market today, the market finished right within its weekly expected move. So did Amazon. So I hope you guys took advantage of that during our last live stream, we were talking heavy about when a company goes outside of its weekly expected move, 68% of the time, you get to Friday's close and they finish right back within it. Amazon did that. It got outside yesterday, and today it came right back to close within it. It's connected to its 5-day EMA. That's a positive. That's a good thing. It is above that trend line that it was facing, that downsloping trend line. That is good. You could see that. Let me get my highlighter again. Amazon has gone through this expansion move right here. After expansion comes contraction. So what are we getting right now for Amazon? Right now we're getting some contraction. We could potentially be setting up for a flagging pattern. That's possible. We could be setting up for a symmetrical triangle, an ascending triangle, some sort of a chart pattern. But nevertheless, I think we're moving sideways. Okay? I think we're going to move sideways, and that's what is being set up with these candles right here. Expansion leads to contraction. Contraction leads to expansion. All right. So the lower end of the weekly expected move was 94. The upper end was 102. Amazon finished basically where it started, almost, not quite where it started, but right there in the middle. Almost finished where it started this week. So moving sideways. That's what I see for the majority of the market coming up, is a sideways movement. All right, let's keep running on here. CRWD, got your crowd strike. Okay, lower high, lower high, lower high, lower lows, lower lows, lower lows. This one doesn't look good. Man, this one doesn't look good at all. It's been a while since I've looked at CrowdStrike. I like CrowdStrike as a company. Cybersecurity is important, and it will be important for our future. Okay? But we're also facing weak economic data, which means companies are going to have to decide, all right, what can I spend my money on this month? Cybersecurity will probably have a budget, especially if you've got customer data you got to protect. But CrowdStrike is in this perfect descending trading channel. I mean, it is perfectly in there. So I would not expect anything more than for CrowdStrike to continue in this channel until it gets to, I don't know, whatever the market thinks is feasible. If I throw up the zones on here, I mean, the zones now are right inside that trading range. Price action is getting right up to the middle of the zones. So it is possible that you could see CrowdStrike make a move that, pushes it up either sideways or maybe slightly inclining to get up to the upper end of that trading channel before just doing it all over again, rinse and repeat. So as far as trading this goes, that could present some good opportunities to trade. Now, if you look at the most recent price action, it looks like we're trying to slow down here and move sideways. I think that's the direction the overall market's going to move in, is sideways. Sideways, sideways, sideways. We'll have green days and red days, but overall, price action will move sideways. Okay. Last one here, TGT, which is target. It's good to know your ticker symbols. It's really good to know them. See, we got the same patterns showing up everywhere. Expansion leads to contraction. What are we doing now? We're starting the contraction phase now, where you have price action bumping all around, but overall it's moving sideways, right? Let's see. If I were to try to line this up somewhat, okay, it's not much, okay? It's a symmetrical triangle is what this is forming, which is a neutral chart pattern. So it looks like overall moving sideways is where we're going. And I think after the big expansion move, earnings will be the next big thing. It's far away still for CrowdStrike. I'm sorry, for Target. But remember, the retail report that we got last week, it wasn't good. So retailers have been hit or miss because of that. Look, XRT or XT is it? Wait, XRT, which is the retail ETF. Look at the move that it made. All right, nice big expansion move, and now we got some volatility creeping in, and that's just because we're going to start moving sideways. Expansion leads to contraction, contraction leads to expansion. That's where the market's headed now for a little while. Look at this. The 200-day moving average broke below it yesterday, broke back above today. We've also got the 50-day moving average, which acted as support yesterday. That's good. But overall, we'll probably just move sideways between them. Okay, I want to keep going here. I know I've got a bunch of you guys queued up there. Excuse me. My apologies for that one. I know we got a bunch of them queued up here, ready to go. OXY, Occidental. So here we go. We have the move down. We have an expansion move up. Just this happened prior. And now this has been in a sideways movement longer than the major indices. So this is what I think the major indices and other stocks like Target are going to start doing now. Exactly what Occidental has been doing. You get to today, a 1.9% move. It moves up to the top of that sideways trading range. What's going to happen next? Well, I suspect it'll pull back down and continue that move sideways. That's what I think. Now, this mark right here, where it ended today, is a pretty significant number. Really come down a little bit. 65, would it be? Yeah, about 65.6 to about, let's call it 67. That's a range that this thing has found a ton of support and resistance going all the way back to July. So it's just getting back to its median price range, okay? It'll probably just continue to move sideways. It may push up a leg. It broke that 50-day moving average today, but that 50-day is declining. It is good to see, though, the 200-day, it was inclining, and that's what you really want. It curled over and started moving flat, But now it started over the past, what is this, about 5 sessions. It started to move up just a little bit. You got your 20-day down here curling up. So in the short term, obviously, the past 2 days have been pretty decent for this, but I just see a symmetrical triangle forming there with the moving averages. It's a neutral chart setup. It's been moving sideways now for a few sessions. I think it'll just continue to do that. You know, there was a lot of pushback from sellers because, you know, a bunch of these candles in this sideways trading right here have big wicks up top. So they ran up through the day and then sellers pushed them back down. Bears pushed them back down. You know, the sellers finally got a little frustrated between yesterday and today, and, you know, that story kind of flipped. So it wouldn't be surprising for it to start finding a new range. That wouldn't be out of the realm of possibility either. So one of those two, I think, is the most likely candidates here. But I don't think it's going to go on a big move, you know, like we saw back here. It's not doing that. Okay. Everything is ready to go up next week. That's an interesting take. That's an interesting take. If I go to the SPY here, I don't know if everything is ready to go up next week. I really think that a sideways movement is where it's at. Now, here's a couple things that I find interesting about the SPY. Let me open this up so we can see it nice. The week to date, or I guess that I can't say that anymore. The month to date, the quarter to date, and the year to date anchored VWAP, which is just showing you the average buyer with time and volume. Today they're in the profit. They're in the green. Yesterday they were in the red. This sideways movement, I really think, is what we're doing next. You know, we got rejected from the top. And if I line this up, you know, that's just slightly under the big trend line. And if I go from the bottom up, you know, I'll get this little extra movement here. But those two angles are so very close that I just think we're going to move sideways here now for a while. We've got the down sloping trend line, and then let's just call the 50-day the average. Maybe the 50-day moving average is, you know, where it's going to be bouncing around through. The anchored VWAP that is anchored to the low of 2022, which was October 13th, right here. That could be the support area, right? And then we have the downsloping trend line right there. Okay. So this could be the area that we trade in for a while. And earnings are the key to how long we can continue to do that, right? Everybody knows that February 1st, we're going to get a 25% rate hike. I'm sorry, a 0.25%, a 0.25% rate hike. Okay. Everybody's expecting that. Earnings, they've been underperforming. Since earnings have been underperforming, and right now, earnings are below the 5-year and 10-year average. It can't hold up if earnings continue to underperform. Okay. Now, we've got nearly 100 companies reporting earnings next week, and that'll help to give us some more data, right? Okay. So yeah, everything can go up to a certain extent until that downsloping trend line that has stopped every major rally for over a year. Amazon took off. It did. That's my point. There's like 500 Fed speakers with hawkish tones and one speaker that hints at a pause in the market rallies 2%. I feel ya. It can be really, really hard in these times of uncertainty. The market participants, they really, really want this market to kick into gear and go up. The first half of this year is going to be nuts. And I think it's going to average down. Then, when we get to the second half of this year, then I think things honestly can start improving. I think the fears of recession, by the time we get to the second half of this year, I think those fears will be answered. Either we are going through a recession, we're in a recession, or everything's all good. We're going to actually get that soft landing after all. So this first half is still going to be very bumpy, just like it has been. Looking at the SPY, look at the chop that we have been all over the place for months. I mean, look at this. Look, the candles are all over the place. We've been everywhere, but the overall trend is down. And I think that will continue into the beginning of this year. Now, everybody started fresh on January the 3rd, the first trading day of the year. Everybody wanted to stay in the green. I believe right now, everybody's in the green from starting fresh on January the 3rd. I don't think it's going to last. That downsloping trend line that's been there for over a year now is going to continue to stomp and stop every rally, every meaningful rally for a couple months. I mean, look at how positive, January has been overall, right? If you bought in January 3rd, you're in the green right now. January 3rd, we were down here in the ascending triangle. The SPY might have been down at 380, up to 383. We're at close to 395 today. So it's a green year so far. But that's not going to last. Watch out for February. February is going to be a month from hell. I think it is shaping up to be tough because the economic data is going to keep pouring in. The Fed's going to take rates up. The Fed may not even hint at pausing because maybe they have 2 more rate hikes to get them to 5% left in them. So it'll be a crazy bumpy ride for sure. Meta was first to go up. All right, META. Yeah, Meta's been on a nice ride. It's really getting back to its 50% mark, which this is what I called out a little while ago as the potential resistance that Meta could run into trouble with. So it met that today. Can it go much further than that? I don't know. But it did close perfectly within its weekly expected move. These numbers are so important. That's why we publish them every Sunday evening to our investor community. But look at this. Meta Platforms played this perfectly this week, where it went down, tagged the weekly expected move, and then went right back up. It didn't even break to the downside of that. That held up really well. It was at 131. Snap had a good day. Yeah, a lot of companies had a good day today. A lot of companies had a good day today, but it's short-lived. It's short-lived. It is nice to see here on Snap making this nice run. And I might as well just go ahead and line it up, and because that's real nice. Let's see, is it in an actual channel though? If it's in a channel, that would be great. Yeah, you could call that a channel, an ascending trading channel here. That looks good for Snap. Its resistance is coming. If you look at the volume show profile, I mean, it's really right here. Had a couple hits right there, there and there. So it's getting close to resistance for it, which is somewhere maybe around the 10 and a quarter, 10.25 a share. That may be the tops for this thing. Earnings are coming up in 11 days. That's what's going to move this thing in a big way. And, you know, it could potentially keep scaling up. And if it rode along this trading channel by earnings, it could potentially be somewhere around that 10 and a quarter and 10.45 by earnings. And then it'll either pop and then run into the next set of resistance up here, or it's just going to collapse and, you know, take out previous lows, especially maybe this one right there. All right, cool. Apple turned upside at the close. Apple is a big one to watch because it hasn't pulled back nearly enough like other companies have. If you look at Apple over the long term here, it's really been moving sideways. And this break right here, when it tagged down here around 125, that was a make or break for Apple there, because back here at 128, undercutting that, going to a new level, a new low down there, Apple had to do something to get back. Earnings are 13 days away. I really think Apple, this trading range right here, right above my head, which comes in at about 120 and drops all the way down to 105. That range right there, I think, is where Apple could be headed. If all of the reports about iPhone production being negative, factories slowing down, Apple not putting in as many orders, if those things come true, then Apple can get into this lower range down here and trade around. And this was back in August through November of 2020. And if you look at a lot of companies, they've already pulled back and tagged their 2019 highs. Apple hasn't. So I think Apple's got a bit more room to fall here than it does upside. All right, let me Adjust that a little bit. All right. So Apple did finish within its weekly expected move. It got close to the upside, about $1 away. It was at 138 on the upside. You know, it's important moving averages are still overhead, the 50 and 200. And they're both, the 200 is definitely declining. The 50 may be close to leveling off, but it's still a chop box that Apple just got out of when it was trading up here. I mean, it was just bouncing around. I think it goes for a leg lower. If you look at this as a potential flagging here for Apple, right here, this is bearish, and this could send Apple down further. So just depending on how you're looking at this setup. Earnings being 13 days away, we're going to find out something there for sure. CCL, I think the short squeeze is about over for some of these. Let's see where Carnival's at. Yeah, I think the short squeeze has come to an end. And it's going down from this level here. I think that'll be it. You know, we'll see. It's possible too. One other thing is that from this expansion right here, maybe it does go sideways and it can hold this level. That would be interesting to see if it could. But the short squeeziness of a lot of these smaller cap companies is over. I think the lemon has been squeezed, if that's a word, to its limit, and I think things will start breaking down from here, especially once earnings start coming out. Bitcoin 22,000. Yeah, that was pretty cool to see Bitcoin get up there. RCL. Let's see what we got. Yeah, another short squeeze. I think the short squeezes are coming to an end, right? We could have ourselves a rounding top here. Maybe we end up getting a double top, but these cruise lines, they had such an explosive move. And look at what happened from the low, the big move up. What did it do after that? After that, it moved sideways for a while. Then it sold off, and then it had a big, powerful move. So moving sideways is a possibility here from that move. Maybe it floats down a little bit and it gets back into the prior trading range that it was in before selling off. Earnings are only 5 days away, so we're going to have some type of news here, which is going to determine does it have enough to go higher or not. So earnings will be the biggest test of whether the short squeeze can keep going here for a company like Royal Caribbean or not. So glad about Bitcoin at 15. Yeah, buying Bitcoin at 15, 15.5, 16 are all good. Those are all good places to buy Bitcoin. 17 even, 18, good places to buy. Bitcoin will be headed up. Yeah, the dollar has broke below my 102.5 level that I've been calling out for months now. And that level is it. I think the dollar now is just going to decline. It's going to have trouble staying where it's at. I mean, it's been moving sideways for a few sessions now, but I think it's done. Once it broke this, the trend line and the 102.5, I don't think there's much left for the good old dollar right now. Awesome. You hope so too? That's awesome. Let's see here. We should have a good week coming. It's possible for a good week to come. Wish is my pick. Yeah, with again these smaller companies. Oops, I got the wrong ticker there. You know, I don't know. These things are getting this chop box. You got to always. I know the past doesn't predict the future, but by looking at what things have done before, it can kind of produce where things are about to go. All right. Well, we've been here for about an hour now, so I want to go ahead and wrap this up. It's a Friday evening. I want to thank you guys for all your comments, for being here. I love looking at the stock charts with you guys. I hope you have a wonderful weekend, and I'll be back here Monday after the market is closed to talk about what happened, why it happened, and what to expect going forward. So with that said, I want you guys to have a good week. I hope it is a good week next week. Like you're saying, we can all hope and pray for a good week ahead. So we'll see what it brings for us. I think sideways movement in that triangle pattern that I talked about earlier for the major indices is what we'll see. So thank you, ladies and gentlemen, for joining me. Have a wonderful weekend. Weekly expected moves will be out on Sunday evening, so we'll look for those in your email and on our Discord. Click the first link in our description if you want to be a part of our private investor community. I thank you so much, and I'll see you in the next video.